Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is October 20th, 2025, and today on our call we have the CEO, Brad Douville from Greenlane Renewables. Greenlane trades on the TSX Venture Exchange under the symbol GRN, and it also trades on the OTC under GRNWF. The company is currently trading at 27.5 cents with about 157 million shares outstanding, or about a $43 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks a lot, Trevor. Brad, we were just talking prior to going on air here. We haven't spoken the last time we made presentation was about 3 years ago. We've spoken since then, but clearly in the last 3 years, you guys have been pretty busy. Lots has happened. So happy to have you back on and get an update, obviously, of the business. But for those that are relatively new to the business, why don't you remind everybody what Greenlane's all about? And I notice you're muted, so when you get a chance there, jump on and let us know all about the business.
Well, firstly, thanks for having us back, Paul and Trevor. Really appreciate it. And yeah, we've been very busy over the last 3 years, and I think it's well worth the update. So let me maybe do that by way of a few slides here. Just give me a moment and I'll get organized. There we go. Okay, so I'll just give the broad brush here, starting with investor highlights. Go through this. I'll describe the industry that we participate and then get a bit more specific around Greenlane and what to think about the company. So the first thing to know is the industry in which we participate is the global biomethane or global RNG industry, and it's growing at 15%. It's been growing at 15%. It's forecast to continue growing at that amount. So, it's hard to find any market that has that kind of growth rate. So that's the market context in which we operate. A little bit about Greenlane. So we've been at this for 35 years. Doing this, we're amongst the very first to get into biogas upgrading. I'll explain what that is. We've supplied 355 systems into 28 countries. And I'll cover very quickly some of the financials, but no debt and solid cash balance. We have been a pioneer in this space, both as it relates to initially getting into the space, but also supplying biogas upgrading systems into various countries around the world. We were the first to provide an upgrader into 12 countries. We have a workforce of around 100 people located in Canada as the headquarters. We have people in the US office in Sao Paulo, in Brazil, a factory in Italy, and people in France. And the other key thing on pioneering is not just pioneering with our global footprint, but also in technology. And I'm going to reinforce that quite a bit here is we are advancing the state of the art of technology in the industry, specifically biogas upgrading. It's the technology-rich portion, we think, of the RNG space. And we've had a number of new patent applications over the last 12 months, including a press release we just issued today on that topic. Finally, we're financially disciplined, relentless focus on improving our adjusted EBITDA results and maintaining healthy cash balance. So just to get a feel for the business itself, this is 2024 full year results. And just to help people understand how to think about the business, on the left is the pie chart for revenue. On the right is the pie chart for gross margin contribution. And the way the business breaks down is it's mostly system sales. Next is parts and service, and then royalties. So you can see, I'll start with the smaller pie chunks. So parts and service constitutes 15% of the revenue, but 31% of the gross margin contribution. A very similar view on royalty revenue, 2% of the revenue, contribution, 4% of the gross margin, and then the balance of that is system sales. So clearly, it just highlights that we have some segments in the business that are particularly profitable. And I'll come back to that and why that matters. RNG. So think of it as a high-value resource that's low carbon. It's a unique tool to decarbonize the most difficult sectors to decarbonize. And think about that in three ways. So there's utilities, transportation, and industry. And the big one is transportation. So today in North America, 90% of the volumes of RNG produced go into the transportation space. It kind of falls under the radar a little bit. It's not well understood, but right now RNG is pretty much the number one alternative to diesel fuel to fuel heavy duty trucks. There's not a lot of options to have a low carbon option to diesel fuel. So that's partly why RNG has been so successful. So the way to think about it is, everyone can recognize in passenger cars that EVs are pretty much considered the future. But for Class 8 trucks, batteries is not technically feasible, but RNG is. It has been for quite some time, and that's the main market for RNG today. Gas utilities, again, very hard to decarbonize the gas that flows through the vast network that we have in North America and other geographies. So RNG can be a drop-in substitute up to 100%. There are limits on the total amount of RNG that can be produced. Generally think of that as around 30% of the total gas that's supplied is kind of the possibilities with RNG. So think of RNG also as RNG is to gas utilities as wind and solar is to electric utilities, but without the intermittency is the best way to think about it. And then finally, with industry, is this helps manufacturers reach their sustainability commitments by sourcing RNG to factor into their thermal energy needs. A bit of a pictogram here just to show the overall ecosystem. So we have various biogas feed sources. So it's a lot of different waste sources. So the main one, think of landfills. That's the most obvious. So that's one flavor of RNG, and I'll come back and I'll talk about it, or one type of biogas. And then there's a number of different feedstocks that all go into anaerobic digesters, like a purpose-built, big steel or concrete vessel that creates biogas. Both landfills and anaerobic digesters create the biogas. And at that point, we do the scope in the middle, which is the desulfurization and the upgrading. Every time you have biogas, it has H2S, which needs to be removed, and CO2, which needs to be separated. And that's the core of our technologies. And that's what we do, ultimately produce RNG that can be directly put into vehicles, can go to green hydrogen production, or put right into the network, the natural gas network. There's two main kinds of biogas, as I just mentioned. So one is that coming from anaerobic digesters on the left, and the other, which is much more complex, which is coming from landfills. And the reason that matters is we've been at this for 35 years. The market has evolved over time. As you can imagine, we have competitors that have entered the market. So because we've been at this for so long and we understand deeply the market and the challenges, we've opted to focus on the most difficult problems in the industry that need solving. So starting with anaerobic digester biogas, there's a lot of companies, including Greenlane, that can do the job of separating carbon dioxide from methane. And in its simplest form, anaerobic digester gas, it's these three things. It's methane, CO2, hydrogen sulfide, and it's the methane that we're after to create high purity renewable natural gas that's primarily methane. This job of getting rid of the H2S, right now there's a lot of different technical solutions to do that, which is indicative that the industry hasn't picked a favorite. We've had our Cascade H2S product line. It's made in Italy. It's become essentially the de facto standard in Italy. It's driving across Europe. We're bringing it to the Americas, and we think it's particularly compelling from a price performance perspective. On the landfill gas side of things, much more complex gas in terms of the kind of constituents. We've got to remove VOCs and siloxanes, but even more challenging is getting oxygen and nitrogen separated from the methane molecule. Very difficult to do. When you do that, you end up losing a lot of the methane that you're trying to recover. In digester gas, the methane recovery is near 100%, 99.5%. But in landfill gas, it can be as bad as 80%. So imagine losing 20% of your product. It's just not a good situation. So we've recognized this as a major challenge in the industry. We've leaned into it, and we're targeting to get the kinds of performance that we see today in digester gas with new technology to do that for landfill gas and do it at a lower cost. So we've got to, like other industries like solar, we've got to come down the cost curve, go up the performance curve. And we're doing that with our Cascade LF product, which we just unveiled last month, first in a conference in São Paulo and second a few weeks ago in Nashville. The strategy of the company is to do these three things. So we set this out at the beginning of the year. Continued sales growth in our most profitable segments, so parts and service, which I showed, biogas desulfurization, which we make in Italy, including establishing market leadership in the Americas, and technology licensing. And I'll comment on that in a moment. Number two is improve the profitability of our core upgrading system segment. So that's completion of existing projects on our books, on time, on budget, get into our cadence of configured order standard products. And partly we're going to do that by number three, which is launch our next generation Cascade LF. We did the market unveil last month, and we're finishing up product development and setting up manufacturing of that product, starting in Brazil, and then we'll switch to Canada and the US. Product line, it's just these four things. We simplified from the past, and that's deliberate. So Cascade LF, our next generation landfill gas upgrading product, just launched. Super excited about that. Cascade MS has a lot of common features with Cascade LF, and that's, again, deliberate. Cascade H2S in the upper right, that's the product we make in Italy. And Cascade Water, H2O, that's the longstanding product for which Greenlane was founded. The Cascade Water is also the subject of our license in Brazil. So we have a local partner. Just over 2 years ago, we licensed that product to them. And you can see it circled in the upper photo on the right. That is a typical sugarcane opportunity. There's 400 sugar mills in Brazil. It's going to be a very large market segment. Today, it's landfill is the main focus in Brazil. But ultimately, when this gets fully built out to the full promise of RNG, it will dwarf the landfill sector. So we're just getting rolling as an industry, but we're really quite pleased with the progress we've made with our local partner there for the license opportunity. On adjusted EBITDA, so again, we've been relentlessly focused on improving this. So our most recent results in Q2, we had some really great results, starting with it segments into two pieces. So it's 3.4 million in positive adjusted EBITDA. 0.5 of that was related to the general business. And then we had a one-time, it's related to a minimum volume commitment from our license arrangement in Brazil. So that came due in Q2 of this year, and we benefited 2.9 million of adjusted EBITDA contribution as a result of that. So that's where we came out there. Relentless focus on maintaining healthy cash reserves and ensuring no debt other than normal payables. So we've been consistently managing that on a quarter-by-quarter basis. So I'm going to stop there. Hopefully that gives a bit of an overview and a launching off point to have a good conversation.
Perfect. Thank you, Brad. Reminder, everybody that's listening, if you've got a question you'd like me to ask Brad, please use the chat function and we'll do that. let's talk a little bit about how do you actually go and get sales? How do you go and who are your end customer, and what's the sales cycle process like?
So we do direct sales. That's first, and partly because it's such a technically involved product, both from a desulfurization perspective and also from an upgrading perspective. So that's kind of piece one. And our customers are most often the project developers. So the project developers, it's an absolutely essential function in our industry. I always call them the bright lights, the people that are inherently local. They either own the assets themselves or they negotiate deals with the asset owners. I should say the feedstock owners.
Mhm.
So if it's a landfill, it could be someone negotiating with the landfill owner to get rights to the biogas. If it's food waste, for example, they might coordinate the food waste source. They will go build a digester and find the site location. So the project developer is our ultimate customer, and we assist them to get all the technical content they need to make their project successful. And then we would sell to them, or we would sell to an EPC that they designate that they would have assigned to construct the project.
Mhm. Now, you mentioned that the industry is growing at about 15% a year when we refer to, the renewable natural gas. But what's the addressable market really like? If you had 100% of the market, how many units do you think would be sold?
So we've, like I said, we sold 355 units to date in our history. Um, and that's accelerating with the growth of the market. I think it's, if you got to look at that in different segments. So the biogas desulfurization, the contract value of that
Mhm.
is in the hundreds of thousands. Our Cascade LF product would be in the millions. So they're kind of different, quite different products. So if you think of Cascade LF, call it in the mid to high single digit millions in terms of each contract value. It's not unreasonable if you look at the projections to be 10 to 20 per year kind of run rate volumes to meet the growth that is being projected. And that's obviously using some market share assumptions relative to the competition. And also, we believe that it's quite unique. It's going to basically advance the state of the art in the industry and give us outsized market share.
Mhm. Maybe we talked about some of the uniqueness. What's your definable advantage when we're talking about some of these products?
So let's take the two main ones that we're focused on. So firstly is the biogas desulfurization product. So I mentioned earlier that there's a number of different ways to solve this problem in the industry. And it's mainly with digester gas. You can either you can inject certain things into the digester to try and control it in the digester. Most often it's controlled outside the digester once the biogas is made. Every single biogas project has hydrogen sulfide that you have to remove. So that's number one. It's a very dangerous gas,
Mhm.
corrosive gas, and it's got major health issues. So you got to get rid of it. Our system is a bit of a paradigm shift in terms of cost and performance. So it has, we're pretty much at the capex of the standard way to do is use consumable media, which has relatively low capex but high opex because the stuff gets filled up after about 6 months. You have to replace it and dispose of the media.
Right.
So our system has, roughly the same capex of that, but substantially lower opex because it's regenerative. It's a regenerative chemical solution that avoids replacing the media. So it gives this picture of we can basically have less than a year payback compared to if we're going to someone that has consumable media as their solution today, we can show them you can pay this back in less than a year. So it turns into millions of dollars over a 15 to 20-year asset of the project life. So we do have competitors that do similar things to us, but the history and heritage of our product was that it was day one made for biogas. always with the concept of you've got to have a low-cost approach for this market. And the big difference between our market and oil and gas, for example, is basically pressure. So oil and gas tends to have much higher pressures, and our competitors have designed for oil and gas where we never had that mindset. We always designed for biogas. So we always had the appropriate materials and the appropriate cost paradigm to come up with this really low cost, high performing product that is quite unique in the industry. So that's our desulfurization product line. And the landfill gas, that one, kind of a classic case of the state of the art in the industry just simply isn't good enough. Like we weren't satisfied with where it was. We're a market participant. We've been serving that space for a long time. We've been thinking about it for a long time. It's one of those things there's got to be a better way. Like this is just not good enough. So we early last year, maybe 18 to 24 months ago, basically took our VP of technology, locked him in a room, shoved pizza under the door, and said, we got to do better. So we ended up coming up with some really great ideas. We did our first patent filings in December, another round in June, and then another one we announced it this morning. So we've come up with some really good ideas, and we think we're on a track to decouple the paradigm in the industry today, which is as the air entrainment in a landfill, it has a spectrum from a little amount to a lot. And there's always been this problem as it grows, you get more and more losses in the system. And we think we've come up with a method to decouple that, to keep high methane recovery close to where you get to today with anaerobic digester gas, which is like 99.5%, and not let that erode as the air entrainment expands. So that's the number one issue we have to solve in landfill gas. I should also point out that of the RNG produced today in the Americas, 70% of it comes from landfill. So that was another reason why we felt that not only was the technology not good enough in our industry, but it's the biggest source of RNG today. It has been, and in our view, it's going to continue to be. So if we can solve it before anyone else, that's going to set Greenlane up for a very unique position.
And talked a little bit about just the sort of competitive landscape, like your TSX V listed company. I imagine there's a lot of big players in here. Maybe I'm wrong, but what's it look like out there when you're up against some of your competitors?
Yeah, well, we used to be TSXV. That's so long ago.
That's okay. Right. Yeah.
Yeah. So main board.
Yeah.
Yeah, you're right. We do have some competitors, some very well-known names. Air Liquide is one of our biggest competitors, I'd say. They're a much bigger company. Our advantage relative to them is we're not a big company. We're a smaller company, and we're nimble, and we're creative, and we're entrepreneurial. The kinds of things that they are none of those things. So that's helpful. But we have to combat them with strong name recognition, and they've been in the market, for as long as we have. So they're a strong competitor. We have some local regional competitors, a couple in the US, one in particular in Brazil. We have a couple global competitors, but it's a much smaller space when we get into specifically biogas desulfurization. It's quite fragmented. When we get into landfill gas upgrading, let me start. The whole upgrading space would be, call it 10 key suppliers. That shrinks to maybe 3 or 4 for landfill because it's a much harder thing to do, and there's fewer companies capable of doing it.
Gotcha. Okay, let's talk about your Q2 results. Obviously, the market was very happy with it. The stock's done quite well since the Q2 results were out. A couple of things I noticed is one, you mentioned sort of the one-time, I can't remember if it was a licensing fee or exactly what it was, but a one-time sort of event there. But the other thing I noticed, and you had it in your presentation, is that obviously the more of these units are out, the more parts and servicing revenue you're getting. And that's a higher margin piece of your business. So maybe let's break that down a little bit. First off, Let's talk a little bit more about the Q2 numbers in terms of the one-time event, and what should investors sort of expect going forward in terms of the mix of revenue? If you could give us any of those details.
Yeah, so this goes right back to our strategy, and hopefully the financial results are reflecting the strategy seems to be working. And so what that means is we've had a very deliberate focus, relentless focus, in fact, on improving adjusted EBITDA. So in the quarter, let me break down Q2. So we had a positive 0.5 adjusted EBITDA, 500,000, and that's associated with the broader business. And then we had an extra 2.9 million contribution from this one-time event related to our license agreement in Brazil. So that one-time event was when we signed that agreement 2.5 years ago. It had a 2-year horizon for a minimum volume amount. So that got triggered at the 2-year anniversary of signing of that agreement. So that landed in Q2. That's the 2.9 million that got recognized on that date. So that's where that piece came from. So the royalty revenue obviously will continue under that license agreement. That market's going to take some time to build, but that is a good, it's got very favorable economics associated with from a gross margin perspective. So that's piece one. Parts and service is also a highly profitable piece of the business for us. And as we get more and more upgrader systems out there, that creates the opportunity set to sign ongoing recurring revenue parts and service agreements. And that's what we've been seeing as that part of our business it just steadily grows at a nice kind of, it doesn't grow at the peak rate of when you have some upticks in the equipment sales side. It's more steady because you capture that business and you build on it. I should say that when we talk about a contract value for a service contract, it could be anywhere from, say, 50,000 a year to 300,000 a year, depending on the scope and the size of the upgrader and the degree of service that we provide. And that would compare to a equipment contract of, let's just give you the range of, say, 3 million to 12 million. So just rough numbers here, right? The biggest equipment contract we ever signed was 35 million, just to put it in perspective. So, that gives kind of the range of what we do. And so the parts and service business is just a nice kind of steady growing, high gross margin contribution part of the business.
Fantastic. Cash, you mentioned you got no debt. Do you have enough cash right now to do what you want to do over the next little while?
Yeah, we do. And this is something that we've been focused on maintaining. So it's, we've been around the 60 million mark for, I think, every quarter this year. We're setting up manufacturing. That's kind of our next big thing. So that's going to require some working capital. We got to get some inventory. I think we've got ample cash to play with. We're not cash consuming right now. That's kind of the point, especially when we're with an EBITDA positive situation, then we won't be cash consuming. And even the recent results being just EBITDA negative slightly, it hasn't been cash consuming. So we've been able to manage this, and we think we're in good shape. Now, that said, we're always looking for next opportunities, M&A, and some more creative things that we can do with investors or with more cash. But those things will be very strategic and creative, and we'll address those as they come up.
You've announced orders and order size. Do you keep a backlog? Like, do you announce backlogs?
We do. Yep. So we every quarter we give a backlog number, and that's been growing healthy. I think, Darren, you have it handy. I think it was, if I'm not wrong, 18 million last quarter? We'll dig that number up for you.
Backlog was 26 million at June 30th.
Jeez, it was thinking of a different number. Yeah, so that's coming along nicely. We're having good success with the desulfurization product right now. And then as we get into sales of Cascade LF, we expect that to keep going in the right direction.
Like a $26 million backlog, how long does it typically take to convert that into recognized revenue?
It's different depending on product mix. So
Sure.
for the biogas desulfurization product, the backlog associated with that product line tends to turn into revenue within 6 months. If it's a upgrade or sale, then it tends to be 18 or more months.
Okay, gotcha. And Brad, what keeps you up at night?
I sleep pretty well, but the main things that keep me up at night, I'd say right now, it's the state of the US economy generally. I mean, I've seen what has been a really aggressive growth pattern in the US over the last 5 years until it wasn't, until basically this year. There's been in infrastructure investment, you require stability, and we haven't really seen that or had that. So it's not a big surprise that there's been a bit of a pullback in the US market. Now, that said, the European market is going very strong. We're having great success with our desulfurization product. The Brazilian market is going very, very strong. So we're lucky to be diversified in that way. I'd say the other things that I always keep a very close attention to
switched to 5 o'clock. There was a bit of a misunderstanding, but I can
Hold on one second.
understand how that could have been.
Vic, your mic's live, just so you know. I'll get this fixed. Sorry about that, Brad. Go ahead.
No worries.
Yeah.
I don't know if it keeps me up at night so much, but maybe it does. I think that we've got some competitors that are pretty smart people and smart companies, and I'm very focused on always keeping an edge for Greenlane, and how do we ensure that we're always at the front of the pack. So that's one thing that, what are they up to? How do we kind of make sure that we're gonna keep 2 steps ahead of them? And but that's or if some way somehow we lose a deal. I mean, we do lose deals from time to time because there's a thriving market out there. How do we do better? So those are the kinds of things that I consistently think about.
Yeah, so normal stuff. Okay, so that's what keeps you up at night. What gets you up in the morning? What new initiative? You mentioned Cascade LF as a new product, but is there anything else that you're excited about as far as call it a new initiative?
Yeah, I mean, the three main things, I guess. So one is the focus on profitability in the business. It's been a journey. It has not been an easy climate, especially for the kind of company that we are in the space. There's just been not a lot of focus on us from the investment community in the last 24 months or so, as most people know. So in some respects, we've been, people haven't been paying attention, but yet we've been very busy and hard at work doing what we do, irrespective of that. So I'm really proud of the fact that we've been able to advance the business and get into, the results that we're getting on our drive and push to adjusted EBITDA. So I'm really excited by that. And then it's the fundamentals, like why, like how are we doing that? And it's really basic business. Like we're providing something that's special in the market that customers want to buy. So that's starting with our biogas desulfurization product. It is doing fantastic right now in Italy, other parts of Europe. We're getting good toehold in the Americas. So I'm really excited about that. And then really about the innovation. And we set our sights on this landfill gas problem, like in recognizing it's a big problem that's been around for a long time and people haven't solved it. And innovation comes in waves, right? I don't know much about music, but I imagine it's something like writing a hit song or something, or maybe I'm overplaying it a bit, but it feels like yeah, when you get some good ideas, it kind of builds on new ideas, and it feels like we've really made a significant breakthrough. And what matters by that is we've got to find ways in this industry to make RNG affordable, more accessible, and find ways, as a technology provider, we play an important role in this industry to facilitate the growth. And so, I'm proud of the fact that we've leaned into it, and we're doing our part to really grow the industry.
Mhm. Fantastic. Well, listen, a small handful of questions have come in. So why don't we tackle these questions and we'll work towards wrapping up here. Okay, Rahil says, could you please provide some insight into the significant year-over-year increase in aftercare service revenue? Additionally, how should we think about future growth in this segment? And could you elaborate on how these agreements are typically structured?
Yeah, so the year-over-year growth in the parts of service is we've done a lot of projects. I think it was at the end of last year, or last year, 2024, I think we had closed out 12 to 14 projects in that magnitude. So when we close out projects, then we sign them up. We don't get 100% of the projects, but we sign up as many as we can. So that gives us a nice base for growth for that part of the business. And basically, the way that we structure it is we have bronze, silver, gold levels, different price points. So we provide the level of support that the customer is interested in. Often they don't even sign up for a contract, but that turns out to be just as much business, if not more, with that customer base. So they call us and they find out that we do add great value. But that's the basic structure. So we might sign a 1-year, maybe 2-year renewable contract. And we don't operate, so that should be clear. Our customers operate the equipment. So we do the scheduled, unscheduled maintenance. And then we'll get them things like, advanced look at upgrades, new software, that kind of stuff.
Is there a lifespan for these type of units, or is it just a function of continuing to change the parts?
Yeah, we typically think of a biogas project 15 to 20 years life, but they can be refurbished and so we've done a number of refurbishments across systems. I mean, we've been at this for quite some time, so you can imagine that we're recycling some stuff that's more than 20 years old already and going back into those projects.
Gotcha. Okay, another question from Rahil. He says, could you share details regarding the royalty agreement, including its timing, annual minimum volume commitments, and the duration of the contract?
Yeah, so we announced that, I guess it was in Q2 of 2023 was when, so there's a press release that gets into some of those details, but basically there was a one-time, and we said this in the press release, there was a one-time minimum volume. So that's the Q2 benefit of 2.9 million contribution to adjusted EBITDA that we saw. So that's a one-time event related to minimum volumes. There are minimum volumes, but those are different kind of triggers in the contract that we've set over the coming years. We had said in that press release that we expect that ultimately this would result in 75 units over around a 5-year period of time. I think it's fair to say that was probably a bit optimistic. It's just going to take some time to build out this market segment in Brazil, and that's very normal. I think 75 is still achievable for this license deal. So that's how we set it up, was the structure. And provided that the minimum volume commitments are made, then the partner can keep open the contract.
Gotcha. Okay, last question from Rahel here. He goes, playing a bit of devil's advocate here, what would your message be to the investors who participated in 2021 financing at $2.17?
I don't know if there's too many of those around. Still, I'd say, everything's a cycle, right?
Yeah.
A big part of that was, markets go up as in aggregate, and markets go down in aggregate. So that's really tough for companies like us to influence that overall up and down effect. We certainly benefited from it on the upswing. We were able to raise some capital. I think we put it to very good use to grow the business. And like I said earlier, the market certainly the investor market had gone quiet on us, didn't really pay attention over the last couple of years, but yet that's allowed us to do a significant reset, invest in technology, and get well positioned for this next phase. So I think we're in a situation now where, the share price is quite low compared to where it's been historically. I think we've set up the business to do nothing but grow and grow in the right way. So that's kind of perspective.
Obviously the share price has done well in the last couple months here. What's been the investor sort of the level of investor inquiry? Is it changed at all, or is it? And if so, what kind of investors are you hearing from?
Actually, if it's okay, Paul, I'll chip in here as well.
Sure, yeah.
The capital markets side, but one thing is we've had insider buying. So our chairman, Wade Nesmith, he's bought quite a bit of stock over the last 12 months. We've also actually had new buyers. We've had people come out of the woodwork, literally citing, 5% shareholders that we didn't know existed actually 8 months ago. So there's been actually a lot of new purchasers, new buyers in the equity side. And then the other piece is we are actually, I think now that from our business side, as Brad mentioned, we've been pretty quiet on the promotional side, but I think we're actually now, because of the business and its state, is starting to get back out there. That's why obviously we really appreciate your engagement, Paul, and your interest. And I think we're probably going to be looking at doing more things like this over the next few months and into Q1, Q2.
Now you mentioned insiders. A question I should have asked: what
You might be
percentage
muted, Paul.
No, no, it should be. I think I'm good here. I was going to ask, in speaking about insiders, what's the insider percentage ownership of the business?
Insider ownership?
Sure, yeah.
I think we're at 9.
Yeah, just under 10%.
Yeah.
Okay, around 10%. Okay. Yeah.
Yeah.
Okay, great. Okay, listen, I mean, it covered all the questions we've got here. Now as investors are sort of looking at the new or renewed business here, what do you think are the most important catalysts or metrics that we should pay attention to really understand that you guys are going down the right path?
Well, we've said in our strategy that we're going to focus on, in the past, we had hypergrowth in the business. That was a consequence of having a deliberate proliferation of our product plan, and that was to stake claim and get market share. So that was yesterday's strategy, but the strategy today is profitable revenue. And we do that by way of focusing on the most profitable parts of the business, but then also taking our core upgrading business and turning that into what we believe can be a highly profitable part too. And that's by way of the new Cascade LF product line. So what people should look for is sales traction and sales interest in our Cascade LF product, as well as a continued growing contribution from those current profitable segments of our business, the parts and service and the biogas desulfurization. Now, we don't split out biogas desulfurization. It's part of our system sales. But you'll see a general kind of growth in our backlog. So that's, that includes the biogas desulfurization plus any new upgrader sales. And typically the upgrader sales, because they tend to be higher contract value, we do tend to press release those when they do come about. The contract value for the biogas upgrader systems are much lower, so we tend not to, there's just too many of those to announce every time we get one because we get a lot of those. So yeah, I mean, those are the main things to look for.
Okay, fantastic. And then I don't know if we missed anything that I should have asked that I didn't. If we've managed to cover everything, what do you want to make sure everybody walks away with knowing today?
I think the main thing is that the climate is a bit strange, I'd say, as it relates to renewables. I think for those of us that are very deep in the industry, it's it hasn't gone away. It hasn't gone anywhere, even though it's clearly not top of mind like it was 2-3 years ago. So that was all, very helpful when people were paying attention to it. But us in the industry, certainly those of us who have a solid business, anytime the market pays attention, you get a lot of, maybe companies that aren't so on solid footing. But, we've always strived to be the solidly planted company in the business in this particular industry. It hasn't gone anywhere. So, we're doing lots of good things. The underlying principles and fundamentals are in great shape in our space, despite them not getting the headline billing they once had. So for those people that want to take a fresh look at the renewable space, and particularly those that want to look at the space of how do we decarbonize transportation, how do we decarbonize the gas grid. All this, wind and solar don't decarbonize those two massive energy systems. So that's what we're focused on. That's what we're doing. And that's what we're making progress in.
Fantastic. Well, listen, thank you, Brad and Darren. Thanks for joining us today. It's next time we won't wait 3 years to get you back on. We'll get you on sooner than that. We've been speaking with CEO Brad Douville and Darren Seed, both of Greenlane Renewable, GRN on the TSX, not the TSXV, but the TSX now. Again, guys, thanks for joining us, and we will watch very closely, and we'll get you guys on sooner next time.
Fantastic. Thanks, Paul.
Awesome. Thanks a lot. Bye for now.